As we just discussed, the mask mandate has been lifted on airplanes and most public transportation, but the impact of COVID on the American workforce is long-lasting. Here to tell us about long social distancing is Stephen Davis, Booth School of Business Economics professor and senior fellow at the Hoover Institute. Stephen, nice to see you. Rochelle Akufo will join us as well. What is exactly long social distancing? How big a size of our economy is it?
So long social distancing is a term we use to refer to people who say, even after the pandemic's over, they don't plan to return to their normal work-related activities. Something like 10% of the population says they're going to continue social distancing just as they did during the pandemic. And then there's a larger share of folks who say, well, I'm not going to return all the way to the way I used to behave. I'm going to avoid crowded elevators, crowded subways, trains, and so on. So that's what we mean by long social distancing. And what we find is that people who express a desire to continue social distancing are less likely to be in the workforce going forward in the coming months and years.
And speaking of the demographics, I mean, you identified that the highest rates of long social distancing, women, older people, the less educated, and those with lower earnings. But how different were their reasons for going this route?
Well, we don't know exactly why everybody's saying this, but many people tell us that they're concerned about infection risk, either infection from COVID or because it's now much more salient in their minds, just infection risks in general. If you've been through a searing experience with COVID personally or through a close friend or family member, then you think about these infection risks. And for some people, it makes them reluctant to return to the kinds of activities they used to take for granted.
Stephen, you say they're less likely to return to the workforce the way they had prior to the pandemic. What are they going to do?
Well, some of them will probably succeed in eventually finding a job that will allow them to work remotely and satisfy their desires to work from home. But many of them won't. And these were people who might not have been earning that much before. They might have been the secondary earner in their household. So now they're just going to take the smaller income that comes along with working less. Some people may end up on social assistance. Some of these people, especially the older people, have just decided they're going to retire early. Is that okay? You know, I'm old enough to retire. Maybe I would have worked for 3 or 4 more years if it hadn't been for these concerns. But given these concerns, given my financial situation, it's just not worth it to continue working.
And as you mentioned, older workers, there obviously a lot of people retired early during the pandemic. But what are you seeing generationally about attitudes to workforce participation? And what kind of domino effect does that have then on the broader economy once these people are out of an already tight labor market?
Yeah, those are really big time issues. Let me take the implication for the broader economy, because it relates to one of your earlier segments where you got into the role of monetary policy. It just increases the challenge for the monetary authority, because if fewer people are in the workforce because of these concerns about infection risks, that means more tightness in labor markets, more upward pressure on wages, more difficulty for the Fed to bring inflation back down to engineer a soft landing, to bring inflationary pressures down without triggering a recession. So that's the broader macroeconomic implication. Another implication, it just means it's an obvious point, but an important one. If fewer people are working, then the economy will produce less goods and services than it would otherwise.
Stephen, there's an interesting piece on Vox concerning Gen Zers and social media trends that's taking off among them. And one of the popular things today is to brag about their lack of desire to work, about their lack of goals. And they actually call it quit talk on TikTok. This is not unusual to see young people not want to work 40, 50, 60, 70 hours. But to brag about it on social media is a new phenomenon. Could that be some of the numbers you're seeing in your data?
Could be. That's not a social phenomenon that I hope continues. It's always been the case, even before the pandemic, that young people were more likely to take a spell out of the labor force for a period of time, to go back to school, to just have fun and return. If that's all it is, I think that's fine. I think it's unfortunate if people really are taking this as a signal that I'm just going to detach from work, because that's an important part of how we contribute to society and how we make friends, how we make associates, sometimes how we find our spouses. So I hope these people will, after a short respite, get back in the rat race.